Good morning. Let's go over here to the Alpha Trading Discord. Pop in here and see these fine folks. Got a real interesting conversation going on right now about options. Let's load this up. Let everybody pop in there. What do we got going on in the markets? Oh, VIX is up. Let's see. What is VIX at? A little under 24. Hold on. Damn brokerage account trying to sign me out. Little donkey. Give me a second. Load this baby up. Okay. Now, let me take a peek here. Look at these questions in the Discord. Yeah, that's a good question right there. I kind of understand what you're saying. It says, how do you pick which tree candle will fall in the forest without anybody hearing it? Yeah, I have deciphered what you're talking about, though, I think. And that's the whole key, right? What strikes are we buying in the future? And what's really cool as well, I will screenshot this and post it in the Discord. Hold on here. Let me close the 0 DTEs. Let's see, where is the May expiration? 56 days? Ain't bad. That ain't bad at all. Man, I wish I could scale this. So for instance, on SPY, like this is the great thing about Tasty Trade. You go into any of these assets, right? There's going to be an expected move populated on SPY in, where was it, 56 days from now. They're going to have the expected move on there. And right now on SPY, top side is about 420. We're getting some feed. There we go. It was Yash. 420 to the top side, 366 to the downside. And so I'll look at that expected move, what they're thinking about, and then I'm going to project the cone. Here, the issue we're having right now, right? We need to get these probability cones to project into the future on non-traditional markets. It can be done. It's very, very hard to do, put it that way. Our guys are good, but when they tell me something's hard to do, I'm like, oh shit, this must really be hard to do. So they're going to be working on it, right? They're going to be working on it, trying to get it to project. Because like when allegedly I was on Durabit trading options. So if I'm on Durabit trading options, our projection boss, it will project from the current candle on continuous markets like cryptocurrency. And so that's why when I was on Durabit, I was crushing the Bitcoin options. Why? Well, because I could get into a 45-day out expiration and look out into the future, right? And see where the 68.3 Laplace or first standard deviation or 95.4 Laplace or second standard deviation is 21 days out. Because at 21 days out till expiration, like say I enter at 45. So think about it. You're only in the trade for how long? You're not in the trade that long at all. If you're entering 45 days out and you want to close or adjust 21 days till expiration, and the reason why we do that is because I'm not going to tell people how to trade options, but as a net seller, options are made to sell, right? Options are made to sell. When you're buying premium, you have to deal with the decay. So if you are buying premium, you want to take your profit quick. You get into position 45 days out, and that asset, say that asset pumps to the 68.3 just in the next few days, and you got your projection boss on, you see where it's at, I'm probably going to close the trade. I don't care what percentage of profit it's in, because it could reject there, right? Could come back to the mean. I don't want to do that. I don't want to go back even. And because the premium is going to decay over time, you want to take that profit. That's why selling premium is the key. And so is what you're trying to do. You're trying to project out in the future, and you're trying to get a range. You're trying to, right, put a cap on the price action using the probabilities. And when you do that, and sometimes I might even jump up a couple strikes higher, just to get outside that expected range a little bit. Like right now, like what are we, 56 days? 56 days out, April expiration. I would probably, if say I was just going to throw on a strangle, I'd probably sell the 365 put and sell the 422 call. All right, that's a massive range. It's a big range too. So what kind of I'll tell you. Let me see here. Why don't we just, for example, let me throw a strangle on here, and I will tell you exactly what it would be. Let's see. Boom, boom, boom. Where are you? What'd I say? 422. Yep. Sell the 422 call. And let me get this done here. God, this wide range, man. Yep, that's what it's all about. Boom. Okay. So now, so 56 days out, I've created this range where I am literally telling the market I do not think like 21 days out that the price action is going to be below 364 or above, what was it again, 422. Now that's going to take that strangle. This is why you need a big account. When you're selling premium, you need to have a massive account. Why? Well, that trade, for example, is going to take $7,863.40 of buying power out of your account. Okay, that's a lot. You need to be running that trade. You need to have a six-figure account, to be honest. Now, could you run it with 50K? You could, but hey, man, you're pushing it, right? You're pushing it. You don't want to use that much of your buying power. So say you got a 100K account. This would be a perfect trade, in my opinion. Now, max loss is infinite. So this is another thing. You really need to know how to protect yourself when you're selling premium, because if that thing gets by your break evens, hello, man, it's your losses can be massive. And that's when you get that email, right? You get that email and you hear about people jumping out of 100-story windows and shit. That's why. Sir, here's your margin call.
How much does it cost to get out? Like, let's say you've locked up $7,900 worth of liquidity. If it goes against you, how much does it cost for you to get out?
Well, you're gonna get that buying power back, right? The max profit on this trade though is only $667. But see, this is how this works. So you're creating this super big range for the PA to stay in. It's not going to be a lot of profit. There's going to be a lot of risk. That's why people first starting to trade options, I highly recommend using defined risk trades. I still use defined risk trades. All right, just makes sense. Just makes sense. Because when you're selling premium, you just got to be really careful. Real careful. So there's certain situations, but you need a massive account, man. You need a massive account to be throwing on these big trades. And that's only one lot. Right? That's only one lot. So
Can I ask this piece, bro? Like, I don't know fucking anything about options, sorry for swearing.
Right.
And I've honestly forgotten the difference between a put and a call, and then they like get all switcheroo, which one becomes, it's like a long and a short and short and a long, right? So like that shit, I obviously just need to nail it down and be able to speak the language.
Right. Well, it's like,
I was just posting a bunch of random copper charts there.
Right.
But let's say you look at it, and my bet is that it goes from the blue line that it's at, mean reverts, and then sometime below that orange line in the mean reversion, the next 7 day will flash. Okay? But from where it is at the top, it's at least, to me, I could just guess, will fall 25% from over there.
Yes, here's the thing with options, and I know where you're going because we already did this in the chat, but it's like when you're looking to get into an options trade, and this is in my opinion, I would highly suggest not looking to any past price action, because what's it going to do, right? It's gonna create a little bit of bias in your head. You don't want that. You want to literally see what the future holds. We're not caring. The only time that and this is what you've seen, any time that we are taking past price action into account as alpha traders is to predict the future mean of log returns. That's the only thing it means to me. I could care less about anything that's happened in the past. Well, because you'll see YouTube Jimmy, he'll be like, hey, we're hitting a significant level. Oh, this trend line, blah, 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 blah. They're using this stuff as support and resistance. They're using past price action to try to predict future price action in a random market. it's a losing venture for sure, man. It's you're going to end up getting yourself wrecked, because it looks like, oh well, here, let's start this projection back here at this significant candle, right, where there was a freaking where there was a trend change or whatever, and then I'm going to create into the future. Then I'm going to look at these distribution levels and try to buy some strike prices. Yeah, you, because you're already, it's almost like you're already taking some of the juice out of the trade, because no matter if that price action was already going up, right? So now if you project all that out, the bias is going to be at the top side. The strikes are going to be skewed a little bit, and that's what you don't want. That's why I don't use drift either, which drift comes into play. But I think drift comes into play is when you're trading like low time frame volatility, or maybe even going down through your workflow to try to get an idea of what your bias should be trading that low time frame volatility. Because when you get those trending moves, right, you want the drift on, because it's going to shift those distribution levels to the top side or to the downside, whichever way it's moving. So it just helps you get every little bit of juice out of it you can. But options is different, in my opinion. You don't want that cone skewed at all, because it's going to, especially, and a good example is like right now, if I were to do it, here's a good, let's see here. Let me pull up Bitcoin. What's this on daily? Yeah, let me turn off the UPM. Boom. Let's see here. Boom. So like right now, if I was starting a trade, let's see here. We'll turn on, let me see where PB1. Perfect. It's right where I need it. PB2. And why is this skewed? A Cookieville. Hello. I'm on the index of it. That's it. Let me change this real quick. Hopefully this flips up. Let's see. Where are you at, Coinbase? Yeah, there we go. Oh my goodness, what's happening here? Let's pull this down. There we go. We're getting some weird artifacts. Yep, it's par for the course. There we go. So now we're projecting out. Let's see how far. I'm pretty sure, what's that go? 30 candles? Pretty sure it goes like 30. But this is what we've got set up. Let's see. Yeah, 24 bars. So here's what you got to do. So then you go in. You go into the PBs. Where are you at? Manual bars, what else set? Hold on, give me one. Step size for projection, right? You're going to kick it up one. Bam.
I don't have that cone. What does that mean?
The PB1? For projection, like I just went from 24 to 48 candles. It just pushes it out farther and then segments it, right? Puts it in a dash line. I got a dog knocking on the door. She's driving me crazy. Let me set this up and I'll let her in. So boom, here we go. Now, wait a minute. What did I just say? Okay, boom, boom, boom. Now we're going to scroll this down. So here we are, BTC data set, right? And we are about, there we go, 47 bars, right? So first thing I'm going to do, I'm going to back this thing off. Let's go. There we go. So where's that? Stay right there. Let me get a vertical. Where are you, baby? Boom. So let me, hold on. What was that? 47?
What's the date there?
Yeah, that was 47. Here is 45. What's that?
What's the date? My internet connecting a little bit slow, so I can't see the text.
21 days out right now. It'd be, what is it? April 13th. April 13th. And say I'm going into, say this is the start. I'm looking to get in. I'm 45 days out from the April expiration. Obviously, we're not there yet, but let's say it is. So here would be the April expiration, right? 45 days out. Here's where I'm looking to adjust. Here's where I'm looking to adjust the trade or take the profit, whatever it is. And if I'm selling premium, say I'm 30% in profit, I'm taking it. I'm probably taking it if I'm 25% in profit. Right? Because we know how these data sets run. It's insane. You want to take your profit. So then I'm going to go up here And I'm going to look at the 95.4 Laplace, and I'm actually probably going to push it up. I'm going to round it up. You see where that's at right now? What was it at? Like 30, 37. I'm probably going to push this up a couple $100, maybe even 37.5. I'm not going to get, I mean, I could go into the settings and get it exact, but let's just say that's where that's at. Boom. And I'm going to come down here and do the same thing. A couple $100, like right at it is at about 21.4. I'm going to push it down to probably 21, right in that area. So now these are the strikes I'm looking at. So if it's 37,432 right here, I'm going to be looking at probably the 37.5, and I'm going to be looking at the 21,000. That's a big range out there, right? That's a big, massive range. You could do it at the 68.3 Laplace, but if you're talking about selling a strangle on Bitcoin, it's number one, it's going to cost you a lot of money, Max profit on that though, I can't even check because the hell, I wonder. Let me see here. Where are you? BTC. Let's see, because they do got the. Where are you? Whoops. Okay, Bitcoin. Yeah, do you want to be futures? USD. Yeah, let's go futures. And here's what is that? We'll just do quick. We'll do 35 days. No, we want to do end of month in May. All right, let's pull this up. So what were those strikes I was talking about? So like 37.5 here. Let me throw a strangle on. So we're 37.5. Man, I'll tell you what, that's a massive range. Safe though. Safe. Let me pull this up. There it is right there. Perfect. Hello, little strike. Oh yeah, these babies. And right now I'm looking at those calls right now. Bid 845, call ask 995. Jiminy Christmas. Okay. That's the problem with Bitcoin options over here. You go to Durabit, that spread will be tight. Let me see here. What is that? 21 to the downside. Pop this up. Boom. There it is. Yeah, see, this is great. But look at this, man. To throw that strangle on, $41,000 of buying power with an infinite loss. But your max profits, say you get out here, right? Dude, your max profit's $7,625. And you've created this massive range. So, hey, if you got the buying power, dude, it's a no-brainer. It really is. It's a no-brainer trade. But that is going to immediately take that $41,166 of buying power, which is gross, right? Yeah, that's the big boys. The big boys are trading BTC options, man, because it is expensive. Will they have micros? Oh, of course. They're going to derivative the shit out of this thing at some point. There'll be all kinds of little baskets that you'll be able to trade with Bitcoin, I'm sure, at some point in the future. And that's also, see, it's perfect too. So this is what's great. This is outside. So the expected move on that end of the month is at 36.5. So I went $1,000 outside to the top, and the expected move to the bottom, I'm inside it, right? So I just boom. It's skewed a little bit, is what it looks like. Maybe it should be down 19.5. But yeah, 21. The expected move is 20.5. So that's a real safe trade. But at the same time, when you're looking at infinite loss, you better be on your toes, because if one of your sides gets tested, you got to know what to do, right? And that's the trick in options. This stuff is just so confusing. It really is. I don't care how long you've been trading options. It's always new. There's always something to learn. As soon as you get something down, then you're like, oh, Jesus, now I got to deal with this. I mean, it's crazy, man. It's crazy. That's fun. We start out with a little options drive. Oh, shit, I just stole that from Tasty Trade. Don't sue me, man. I love you guys. All right, let me turn off this TV.
Can I ask?
Yep.
If you were to, this on 24 hour, if you were now, let's see how many days ago this was. So like, let's say I wanted to take an options trade when all the volatility is at zero, which would technically mean that variance is very low, and maybe option prices, if people don't know how to price them correctly, would be incorrectly priced.
Here.
Now, that's an inefficiency. that you can exploit.
And I know right
So
where
like,
you're
let's say
going.
there's an 2 options contracts that you know on the 24-hour time frame that matches your idea of 21 days out.
Yeah.
You see that they are incorrectly priced, but you're only wanting to buy them when you know that volatility is going to expand, right? Because that's the easier side.
You talking about buying premium?
Yeah.
See, that's the advantage we have. And this is what these guys that trade options all the time, where you try to talk to them about volatility percentile, they're like, no, it's all about implied volatility. It's like, okay, dokie. All right, man, no problem. Trying to make your life easier, but whatever. Because when volatility percentile is crashed, especially, check it out, if you got all 3 lengths on a daily, say you got all 3 lengths on a daily, and they are like all under 10 percentile or something, right? You know a volatility expansion's coming here at some point. So that's the thing, though. You got to be able to get in. Is what you're hoping for is when you're getting ready to enter these options trades 45 days out, that there is a clear volatility is expanded or volatility is contracted all the way. That's what you're really looking for. Because if it's already expanded all the way, perfect time to sell premium. Right? Perfect time to sell premium. When it's low and getting ready to expand, that's one of those things where if you have a big vol expansion, man, just like right now, we have seen the way BTC moves. What are we at? 27 right now? Dude, you have 110K day on Bitcoin, you're blown out. You're blown out to the top side and you're going, what the hell just happened? Well, you sold premium when percentile was low. That's why I say there's certain times you can buy premium. But when you're buying premium, you got to take your profit. If it presents itself, you got to take it because you're going to lose it at some point, right? You're definitely, if you're buying premium, you're not sitting in that trade until expiration, for God's sakes. You're getting the hell out of that trade. And you're
using the pawns to trade options makes sense. Like what you just explained there, it's like, all right, in 21 days, like it's so right. Like just move 10K from here. Like it can happen quite easily with this shit, with this Bitcoin. So yeah, that makes sense. Why are you projecting from today's date out? Like when you're taking the trade, the day of taking the trade, obviously we know we want to be taking trades when it's either super expanded, looking for contraction, or when it's super contracted, looking for expansion. So 0 and 100. You define those trading points, and you take your trades at that. That makes sense.
So, because like say right here, you're 21 days out. Boom. Say PA is testing the top side right there. It's right at your break even. Where that thing jumps over there. What's that?
What's the price? 38K, pretty much 10K above.
Right there, it's like 37.2. No, that's like where I went to the top side of that trade. What did I do? The 37.5. I can't remember exactly what it was. I erased it. Shit. But if you're up here at 21 days out, is what you're probably gonna do here. Now you can get out of the trade. You can be like, okay, it was good while it lasted. I'm at my break even. I'm just gonna get out of the trade. Or you could just roll the expirations, right? There's a lot of things you can do. It's just very tricky indeed.
What's the risk in rolling it if it's gone against you?
Well, is what you're doing. You're going out to. It depends. Are you rolling the strike or are you rolling the expiration? That's the thing. And dude, this stuff is confused. This is stuff I'm still learning. Trust me. When I go to roll positions, trust me, I'm talking with other people. Right, I'm going right to Tasty Trade. I'm looking. Have these guys discussed this before? Because there's so many different things that happens in options. It's insane, and those guys cover a lot of it. So yeah, that's when it gets real complicated when you're doing that. But then you start to do it, and you're like, oh shit, that was actually kind of easy. But that's the things with options, man. There's so many different things going on, and none of it's real super easy at first, but it gets easier. In the beginning, you're lost, right? I mean, you're just like, whoa. And that's all it is. Puts and calls. It's just like buying and selling, just with the regular market. So in my head, I thought it was complicated. So I start to complicate shit. And then I had to go back to the point where I'm like, wait a minute. There's just puts and calls. There's only buying and selling going on. And if you're bullish and you're buying premium, obviously, what are you doing? You're buying calls. If you're bearish, you're buying puts. If the market is telling you should be selling premium and you're bullish, you're going to sell calls. Or, sorry, you're going to sell puts. If you're bearish, you're going to sell calls. That's just...
Well, that's where the contracted volatility and positively correlated. What does that mean again?
Right. What the hell? I get some weird text, man. Go on the carpenter realty and look for a house on Main and Mills Road. It's like a big red house and it's got what kind of thing you pay? What the hell?
No, Bobo, I don't know if you are streaming from your phone, but maybe lift it up so that there's more signal on the phone. Or because it's a little bit blurry. I thought it was my side, but XMars is also having a little bit of blurry connection on this one.
What'd you just say? Got crazy women texting me too early in the morning. Oh, look who we got in the chat. Xmars popped back in. Where you been, bro? Haven't seen that name in a while. Good to see. I love it. People still hanging around. Good. You know what we do. Let me get these PBs off though. I'm sure at this point, option talk, we're losing some people. You get this off here.
Yeah.
Let's turn this. We can do this all day long in the chat. There we go. Let me reset this price scale. Time is it? 9:26.
Well,
Almost.
Ain't no losing nobody. We ain't nobody showing up in the first place, man. That's all
Hey,
right,
man.
We're good. Whatever you want, man. Good,
We
man.
all good.
I like it.
I
like seeing people learning about stuff. It's good, man.
I like the learnings. It's what we do.
Yeah, dude. No, it's just especially because like when people want to get into this stuff and they don't realize what position size they need and stuff,
Right.
then they get wrecked too. So what you're doing, man? You're like you're saving them, dude. You're saving them.
Dude, I saw that little GIF you posted in there, and I just like glancing at it, I could have swore that you copy pasted Crown's head on that dude.
I was about to put it on.
That's what it does. If you look at it from a distance, it looks like you looks like you put his head on that body or something. I was laughing.
I see what you mean. That's hilarious.
It is. It does look like him a little bit. Hilarious. All right, but anyway, so what are we doing here? Look at the Bitcoin data set. Dude, yeah, this is why. Am I buying up here? Man, this has got some work to do. Either this thing's going to go sideways until this power mean band catches up to it on the daily, right? But we all know what happens when you get outside the power mean band, right? At some point here, and by going down through these time frames, you're going to know the good entry. You're going to come back and test the wave trend. I mean, look at this. You get outside it right here. It made a run for the Fisher. That's a powerful sell-off right there. To get below the 99 log MA, it's powerful in itself because that thing is a beast usually. Man, it just, boop, no thank you. We'll just skip right on by you. But one daily candle from the 99 right to the reverse wave trend. And then what does it do, man? It just shoots to the top side of the power mean band. Look where the wave trend is down here. It's almost up at 24K now. Guys, we're talking like 4K to the downside if this happens. But every day it's rising probably $500 at least, maybe a few hundred. So it is creeping up there. Let me see here on the 4 hour. Oh, we looked at this yesterday. Like, watch this. Whoops. Let this thing populate. This is a good example. Populate, my friend. Please, quickly. We have people in suspense. You're going to... Does it get any better than that? Here was the initial blast. I mean, this thing roared down here, right? We're outside the power mean band. First, it makes its way back up to reverse wave trend. That was a little choppy, right? Finally got up there, though. Then it runs, rejects on the Fisher, bounces off the 33 log MA. God, look at the 30. Is that the, wait a minute. No, they're good. That is actually the 99. My bad. No wonder. So you bounce off the 99, then you rock it. You're outside of the power mean band. Was it trying to come back to wave trend? Yeah, it was. Just kept. All that was building. You want to see what else was building? Let's see here. Where we got here? Right up here at the end. I mean, you can see the bear div. The bear div was building at the top. It was actually building right here. You had a little pullback. Was it building there? Yeah, right there. Boom. You had the pullback inside these log MAs. It's always going to be bear div bringing you back into that power mean band. But then 1 4-hour candle, job done. The dump we had right to the wave trend. Now what's it do? Bounces right outside the damn power beam band again. This data set's on a mission, right? You can tell that they're definitely, the Bitcoin bulls are in control right now. They'll still be in control. This thing can dip down. I mean, on the 4-hour again, what are we talking about? 27.1. Here's what I'm looking for, though. If this is going to pull back to the daily wave trend or pull back, a few $1,000s, I'm looking for probably the 4-hour power mean band to probably flip bearish. And then look down here, Fisher, the 99 log MA down here around what? 24.5 area. Something's got to give here, right? Because this moved to the top side. And this is how BTC does it. And this is why people get wrecked. They don't understand volatility. They definitely don't understand the volatility of Bitcoin, right? This is like, I love all the memes out there, that's like, first time, got the dude with the noose around his neck. Once you follow Bitcoin for a while, you get immune to this kind of stuff. You understand, but it freaks new traders out. They're like, oh my God, I just got wrecked. It's like, did you take your profit? Well, no, man, it was bullish. And it's like, dude, you got to understand the volatility of Bitcoin. There's nothing else like it in the ever. Not just now, ever. This thing is so volatile. But when you have these indicators, you know when these things are coming, right? You know when these things are coming. Let me see. Let me go down here. See where we're at on the 33. Oh, where you at, dog? I hear him out there barking. Chasing something. Let me see. I've been seeing a lot of deer again. Lots of deer. Come on, UPM. Give me that good love. You gonna populate or what? No, screwed me. 45, back to the 33. Come on, populate, man. This indicator, if you ever notice, if your UPM or your Entropy or what, these things have massive codes. I mean, we like push Pine script to the limit. And if you look at everything I have on my chart, this chart right here, this is sucking juice, man. For sure. I bet if every alpha trader we had got on and started charting at the same time, we'd probably blow up TradingView. It'd be like, what the hell? I mean, look at the 33 on the dump we had, right? Way outside the power mean band. What did it do? What did it do within literally, the same day? What have we got? 1, 2, 3, 4, 5, probably about 6-7 hours, right back to the wave trend. Right back to the wave trend. Then where's it dump out to? Bottom of the power mean band. Then what's it do? It says, screw this. Whoop, right back up above Fisher. Crazy. So yeah, that's what I'll be looking for on the 4-hour for that. If that's going to pull back that far and not just go sideways and let that daily UPM catch up to it, it's going to, this is going to dump, right? Could be this weekend too. Wouldn't be shocked at all. We've been laying it on those CME boys, all right? Every weekend, the last few weekends, I've been throwing some gappage on them boys, which are those real gaps? No, not in my opinion. Anybody that talks about the CME gaps, it's like ding, 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 unless we're just like, these, right? When you do not test daily, weekly, and monthly volatility ranges, those are the areas that are going to get tested. And sometimes you'll see where those gaps are at, and then you'll look and, hey, you know what? We got a weekly range down there that didn't get tested. And that's when, man. But this is people try to trade these gaps. You don't try to make a trade because you think that a data set is going to go fill a gap. You take the trade when it fills the gap, right? That's my opinion. If you're trying to trade the other way, you're leveraging against yourself to just get wrecked, in my opinion. That's how gaps are traded, in my opinion. You wait till the data set is back at the gap, And then you reevaluate, you look, what are the market conditions? What's the volatility doing? Is volatility crash? Are we looking for a vol expansion on percentile? That's why if anybody ever's coming over here and they've been trading options and we talk about volatility, most of the times we're not talking about implied volatility. We're talking about volatility percentile. And that's what I try to talk to people that have been trading options forever and be like, if you just look at it, we even created an indicator, the volatility grade. It's implied volatility and historical volatility put together. And when you use those two along with percentile and you understand what you're looking at, blow this up. Bam. So the small line that's switching in between red and green right here, that is volatility grade, right? So right here, you got grade dumped out. The 525 length volatility fell off a cliff. Is this an outlier? Hell yeah, it's an outlier. For what? This dump right here. This dump. Look, the correlation already broke the candle before, right? You had a little bit of volatility expansion. You can see it tried to push outside to 68.3. You can see the wicks. This is like a warning. This is like a warning shot. Big time. And then boom, what happens when the volatility expands? Well, you're already negatively correlated. That shit wasn't even trend. Little light trend. But that was the outlier. Bam. That 33-minute candle. It went from what? 20. What? I mean, this is Scalp City. 28.1. You got a $700 move right there in 33 minutes. Pretty good. And where does it pull back up inside? You get a 33-minute candle that literally shot out probably to the 0.9999 percentile level. That's, or a fifth standard deviation, maybe fourth standard deviation. This is the 99.7 Laplace. What did the probabilities dictate? What people always ask, why do we get these wicks? Why didn't the candle stay down there? It's all probabilities. There was a 99.7% chance by the time this candle closed, it'd be up inside that line right there. Did it happen? Of course it did. Does it all the time? No. But that's where you got to be able to read the volatility to see what's happening, right? Look at that shit. I mean, that's a 100 percentile. I mean, it got jacked big time. But then it started contracting a little bit. Yeah, that's a toughie. But we're not trading the 33, right? We're trading the 3 to 6 minute down here, 1 minute chart. You're gonna see this exit. You're gonna see on the lower time frames. Guarantee you. Especially if you're using a projection boss, you're probably. Let me see here. Let's drop down first. Let me see what time that was, so I can go back to it. 0730 March 24th, 0730 March 24th. Let's see, where are we? 0730. Whoops, did I already pass it? Was that it right there? Hold on. Holy shit, did that happen in 1/6? Oh, please. Let me see. 28.1. Sorry, hey guys, that was a 6 minute candle, not a 33 minute. I was like, hey, we're gonna we drop down to the 6 minute, you're gonna see it coming a mile away. Well, it was a 6 minute candle, and what did it do? Rejected off the reverse wave trend. Bam, all the way outside the power mean band. What does it do? Literally in about a half hour, 40 minutes. Whoop, right back to the reverse wave trend. This is why people get wrecked, man. Right? Look at the volatility. Here's where the correlation broke. Negative. Right here, you get a little expansion. So what if I'm looking at this? Yeah, I'm probably getting in a trade. Let's see why. Well, you're having an outlier. You're definitely having an outlier. Z-score log returns is above the 99% confidence interval. Let me see something right here. Now, this would have been a little tricky unless you go back because there was no div. Tricky move, man. That would have been hard. We're probably talking that entry is down here on the 3 minute, not the 6, because I'm looking for divergence, right? I'm going to look for a little imbalance in the buy and sell pressure, because this is where the algos are jamming. You're going to see a lot of div usually. I'm surprised there wasn't any bear div right here. There wasn't though. Crazy, man. Crazy. But it did set up hidden bear, right? That's why this candle pulled down and boom, we dropped back down below the power mean band. Crazy. Yeah, there's a lot going on here. It takes a while. We're not going to lie to everybody. It takes a while to learn the VEPS. But once you do, dude, there's no stopping you. No stopping you, especially if you're already a confident trader and you get these tools. You're like, okay. Damn.
So are we looking for dump on a 5 minute as well? See, you also on a 5 minute, 6 minute?
Are you talking about like right now?
Yeah, I see Shannon Entropy is looking for a new
trend man.
In the bottom right.
Look at the volatility starting to expand. And here's what I'll do too. So we got the 981 here. Let's see if that thing's positively correlated. What are we on, 6 minute? This is why you need to already, this is where it comes in, where you're trading these low time frames, right? You gotta have your shit down because you're checking all kinds of stuff. Yep, positively correlated on the 981. I would say yes. This thing's about to have a little move down, but the market just opened, right? Let's see here. And we've already been rejecting here before the market opened off of the center of the daily volatility range. Now it's below the 68.3 Laplace. Probably going to make a move down here, 27.470 or something. Let me see here. Yeah, because what is the freaking price right now? Yeah, I mean, dude, over about $150 scalp if it does happen. $150 scalp if it does happen. But would I be in the trade? Yeah, probably. Let's see here. 6 minutes. Variance is low. Variance is turning up though. But it does. It looks, all the fissures are down. Clean charts though down here, man. Let's look on the 3 minute. Yeah, there's the hidden right there. Yeah, got some hidden bear on the 3 minute too. Volatility contracting, positively correlated. All the fissures getting ready to break down. We just crossed the zero mean, but then you got to look over here and it's like this thing's still negatively correlated, right? So is it a good entry right now? Probably not. Probably not, even though there is some div. But we're going to get a new candle every 3 minutes, right? It's in the 3 minutes even rejecting off the wave trend, but you're already below, right? So how far down? That's why when you're way up above, when you're above the power mean, that's when you're really looking for the strong pullbacks to the wave trend. It gets a little more tricky when you're already below the power mean band, right? So yeah, you just got to be careful, man. Got to be careful. Plus, the market just opened 10 minutes ago. What are we looking at? What's the dollar doing? Running. Already at a 1 SD to the top side. Got back up above that weekly support level too, but it dumped right back down below it. But the dollar, man, been crushing the market last couple days. Let me see some. What's a VIX doing? Yeah, up 1.8%. This intraday will populate anytime. It's still delayed. Minis are not liking it. Where's SPY's daily range? Let's see here. And really, I mean, it's right there. Kind of closed right below it. But look, here's this tight weekly range on SPY right here. Here's this tight weekly range, which, let me go back here. When was the last time we were down there? I think it was just right at the beginning of the week. Yep. Okay. But that tight range, that's telling you right there that the SPY data set's going to trend. Has it been trending this week? Low time frames, up and down, all over the place. Yes, it has. Trend doesn't mean just one way. It means that data set is going to be pushing hard. You go on the low time frames, you're probably going to see a lot of trend throughout the week on those low time frames. And we're almost at that weekly right there. And that's a first support level of the daily range. And so what are these? Let me see. What's the top side of the 68.3? 394. What are those calls? 53 cents right now. Yeah, not bad. 53 cents. Yeah, that's what I'm looking for. If we're down here near this level, or we get down to, look at the first standard deviation is right at the bottom side. Right at the bottom side there of the weekly volatility range. Move this up a little more. Where's the 95.4 Laplace? And so this is using the probabilities intraday just to see, because I'm usually not going to get into any of these intraday options until sometimes about an hour, let the first move happen and see what the probabilities are dictating. Because what if we get a dump right now, right? SPY just shoots down to like the 95 for Laplace. I mean, I'm looking up here. I'm looking for a bounce, right? I'm going to look for a bounce. I'm probably going to get a little closer. Maybe I'm looking at some calls up here at the top of the weekly. All right. Am I going to go all the way to the daily range? Since literally the data set hasn't touched it yet, but look where it closed, right? It opened up only about 65 cents. Only about 65 cents. It's probably within the range. I like to say, yeah, it's probably been tested. Let me see here. Bitcoin down. Oh boy, we got tight ranges on some stocks. And then of course the trades I'm in. Crazy. Let me see who's in here. Good. Can we go with this? Here's what I wanted to show too before I dive deep into these traditional markets. Look at Bitcoin on the 5-day. Look at Bitcoin at the 5-day. So first on this move, right, you blow through the 33 power mean, get up to the 3 SD band. Thing just rolled over, went sideways pretty much. You had a little up moves, right? Second standard deviation on that 5-day candle. Pretty much ranged in the, you know what, boy, it made a run. Let me see. What is that? 68.3? Yeah. Went up to the top side of the 68.3, down to the 95.4 Laplace. That was the range on that 5-day. But then what happens, right? Since you were up at the 3 SD band, it goes sideways. You break down the 11 length RMLR, comes back down, tests that same power mean. It just blew through and bounced. Where'd it bounce to? Right back up. Right back up to the 11 length RMLR. All right. Is it going to get stuck under here? Sure could. It sure could. Let me turn on the 30. Where's the 30 up here? Yeah, it's. Here's the thing, right? This 30 at some point here, we're going to have an intersection on the 5-day. This is I'm bullish on Bitcoin, but I am looking for a pullback. Doesn't have to, but when you get outside those power mean bands, and you're rejecting right now on the 11, and you got the 30 coming up here to intersect and cross up. Man, that's at 20K again. Really? You talk about you want to see these retailers get shaken up and stirred. That thing pulls back that much, you're going to see a lot of crying going on. But they said we were bullish. Yep, we are bullish. Let me see. All right, that's enough on Bitcoin. Bitcoin's a beast. It's not going anywhere. I love it. I do like showing it though, how powerful it is. Let's look at the 5-day chart real quick. Still having an outlier on the 5-day. There's another thing, all right? So we just looked at the RMLRs, all right? Look at the 5-day. You're outside the power mean band. So once again, is this data set just going to go sideways and let all this catch up, right? We're outside on the weekly, daily, fucking 5-day. I mean, it's all over the place. You've got all these wave trends down here. On the 5-day, it's at 23K. I mean, man, it's $5,000 move almost. 4,700 to the downside. Could happen very easily. You are finding some, I mean, you're above that 99. So it could, BTC could go sideways here. Because at some point on these macro time frames, this wave trend is going to cross back up the fissure at some point. So when that happens, look where this would make sense for this thing to go sideways from here. It really would. You're going to get the power mean band flipped up bullish. The wave trend and fissure are going to come in and start battling. And boom, it's already tested. If we were way up or way below, those areas love to get tested. So right now, it's kind of up in the air, man. I'm sitting on my hands on Bitcoin. Am I getting in any longs? No. I wouldn't. Not up here. 100%. I'm waiting till the data set gets back inside the power mean band. Some of these areas get tested. And you got the look at the bear div on the weekly, man. The bear div on the weekly. Positively correlated too. But is it going to happen yet? Why are we getting this doji right now? Look at the fissures. All right. The entropy percentile. Everything's looking good. The volatility is just pegged at 100%. Last 3 5-day candles. It's positively correlated. So that thing is not until you see a contraction positively correlated, right? It's not gonna start coming back down. But we'll see. I mean, this thing could easily. The 5-day correlation could just break to the downside during contraction. That's just going to continue a walk to the top side. Or flat, thing. I'm the more I look at these charts, I'm like, God, man, is BTC really going to show some strength and just sit up here around 27, 28K, just hover? Let me see something here, because we got the end of the month coming. Got the end of the month coming. Here's another thing, though, right? Here's what's the time? Yeah, that's the top of the weekly at about 27.1. But we can't forget about BTC's tight monthly range. Where are you? You're down. There it is. I mean, look, this is why BTC. It literally told you at the beginning of the month, hey, we're going to have a trend. And when you're looking at the charts, you're like, BTC's about to pop. About to pop. We were talking about it in the streams and the chat. You get this tight of a monthly range, you're going to see a trend happening. And man, did it ever, right? Thing went from what? My God, we had like an $8,000 pump or something, 9,000. If you're going from the lows, it was more than that, 13K. Powerful, man. Powerful little move. Bitcoin's doing it. So we're talking 23.2. Could this thing come back? And that's where a lot of those wave trends are at, man. That's why I'm telling people, be careful here, man. Be careful. If you're just investing, it doesn't even matter. Right? Slam that BTC in your ledger. Look at it 5 years from now and smile. Smile big. Trying to get nephews and nieces. Just like, why? Why are you guys not buying like $100 of Bitcoin a week? You're young. You're very young. It's time. Bitcoin is your future. Instead, what are they doing? Sitting around playing video games and shit. Getting distracted. Yeah, that's what they want. Especially the money peoples. They don't want the peasants getting rich. That's for damn sure. That's why taking your
100%, man.
100%.
I mean, look at all the reaction to like what Powell said this week. Literally, when I'm just saying to X Mars in the chat, like Powell was saying one thing, and people were like expecting the result to go one way, and it went the other. And then everybody was like, yeah, when Powell speaks, price drops. Then when he stops speaking, price goes up. Yeah, but it doesn't go up. It doesn't go down and up exactly the way that people think. And the VEPS told you very clearly what the move was, and the targets were dead on with the VEPS. And if you listen to people that were like market analysts, they were wrong. they were wrong. Like they thought it was going to keep dropping for a while before it went back up.
Yeah.
Nope. It just nice little bounce right at the target. I mean, it was a perfect target.
Perfect.
And it bounced up also on a perfect target. And yeah, misinformation is what kept a lot of retail traders in the red on that day, big time. A lot of people get wrapped. For sure, man. They do not. And look, what's their motive? What's their plan? Their plan is to mess around, to screw around with interest rates and inflation, to literally force more people to lose their jobs, like to force companies to fire people in order to crush the economy, because the economy is too hot. But we're going into a recession. I'm sorry, what? The economy's hot, and that's a recession? What kind of nonsense is that? Right?
Yeah, right.
The theater is a joke.
Yeah.
So it's like, that's why you don't pay attention to the news for trading. Like, it's interesting. It may feed you some information, whatever. It may let you know what the herd is doing wrong, but it's definitely not worth trading. Like what we have on our charts is way, way ahead of the game.
Way.
Anyway, yeah.
Way. Good morning. Didn't even put anything in the chat. Woo! Alpha Trading says good morning. And if you're watching on TV, hit that rocket icon. I just hit it for number 4. And I do think TradingView, right? The viewers are liking what they're seeing. We're getting a lot of views, which is good. I mean, we coming from a different angle from anybody else you watch. I went through all the videos yesterday and watched little bits and pieces of everybody else that's publishing on TradingView, and I'm just like, whoa. We have an opportunity here to grab the masses because, oh my God, it's such foolishness. It's all traditional TA stuff, man. It's all traditional TA stuff, dude. And if you other creators are watching this right now, don't be afraid to come and ask questions, man. I'm telling you, you're using lagging indicators. We're literally trying to help, for God's sakes. We don't have an agenda other than we're tired of seeing people lose money. We've all lost money. This is why we switched it up. Everybody got sick and tired of this stuff. But what do most people do when they're using traditional TA? and they think something's going the right way, then what are they going to cry? These markets are so manipulated. This is ridiculous. I can't believe this. Somebody needs to do something about this. Like, dude, and if we're talking about crypto, it's like, dude, you're your own bank. So what are you doing? If you are your own bank and you're trying to, what's the main goal here, right? To start stacking dollars or crypto or whatever the hell you're trying to do, guys, you're not going to do it using traditional TA. I mean, I've seen so many stories, right? I'm not saying that everybody that trades that way is a bad trader, because it's not true. But I know there's one thing. Anybody that's using traditional technical analysis, I guarantee you, the people that have a positive P&L, they all have one thing in common. They take their profits, they limit their losses, and they're treating it like it is their job. They're not emotionally attached to their trade, right? And when you're not emotionally attached to your trade, that allows you to take the profit, because the little greed monster in your head's not going, oh no, this move's going to get higher. No. That calm, that steady voice in your head that understands what you're looking at is like, it's time to take profit. Why? Well, we're at this distribution level. It's a perfect time. If I see something that's going to allow me to get back into the trade, I'll do it. Right? But I'm taking my profit right now. I'm going to realize my profit. That's the only way to build a P&L. If you're just sitting in profit and not taking it, it's the worst thing you could ever do. Worst thing you could ever do is not take your profit, because I guarantee you these markets will take it from you. We all know that. These markets will take the profit from you. And if you're not limiting your loss, that's all ego, right? That's all ego. I know. I'm speaking from experience, where you're just like, because when it came to traditional TA, and if everybody remembers, I mean, this was years ago, I had a great strat that I built to the point where Goofy stole it from me and sold it. If everybody remembers that. Just insanity, man. Total insanity. But I had a good strat. And the only reason why I was profitable is because I understood, and I was trading Bitcoin, specifically just Bitcoin futures, in trading that delta, right? Which is literally, a lot of people will say it's impossible. No, it's not impossible if you have the right tools. And that's one of the main reasons. That's what we saw immediately. We built a lot of this for options, and we're like, wait a minute, we can trade delta using this stuff, especially volatility percentile. It just got lost in the weeds, man. I don't know why these guys have been doing options for this long, have never delved into volatility percentile to understand whether they should be buying or selling premium. Said they're using implied volatility, which we all know, man. Things all over the place. It really, to me, doesn't help. Doesn't help at all. The only time I look at implied volatility, I'm looking for something like above a 50 read, right in there, 50, 55 read or something. And I'm going to throw on some iron condors or something, right? That's when you want to throw on the strangles, the iron condors, when you're looking at implied volatility. But dude, you need to know where the percentile is, because it's going to be totally different than what the implied volatility is. I could give some examples, but all you got to do is go look it up. If you have our volatility indicator, look what the percentile is on the daily on the asset, then go look at the implied volatility, and you'll be like, oh shit, well, that didn't make sense. Yeah, well, it's two different things. But we do have a volatility grade. It's historical volatility and implied volatility. And like I said before, when you use it along with percentile and they all peak out, wham, on that, I mean, you're taking profit. I'm taking profit on this candle. Not only did we hit a 99.7 Laplace distribution, right? You got volatility grade and the 525 length all pegged out at the top. Now it's just going sideways. You can see the little red line right there. All right, it's hiding behind these APPs, which that's alpha price percentile, the little white and blue lines, right? A lot of people would say, well, does that mean it's oversold or overbought? Newsflash, there's no such thing. There's no such thing. Anytime in the past when I was using traditional TA and all the gurus and all the goofies would start saying, this is oversold, well, I'm selling, right? This is overbought, I'm buying. Why? Because people are buying and people are selling. There's no such thing as oversold and overbought. That's why you'll see a Stoke or an RSI literally at the top of the range just snaking around forever. Go back into all the bull runs on macro timeframes and look at the RSI and Stoke and go, how in the hell do I trade this? Well, you can't, because the damn things are lagging behind. Look at the returns oscillator. Do you see any of that foolishness happening? No, you don't. Why? Because the returns mean revert. God, I hope this makes sense. Returns mean revert. Hence, look at the returns oscillator. Right? And people will say, man, that's a lot of noise there, man. Yeah, as a volatility trader, you want all this noise. This noise, unlike all the noise coming from traditional TA, that is just get you lost. If you've ever noticed, you put together a bunch of traditional TA indicators, nothing's driving. Most of the time, nothing's driving. That's why you see all these arguments going on. MACD's better than the damn cloud and this, that, and the other. And I like the 50 MA and blah, 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 blah. Everybody's like thinks their strat's better than the other ones when they're all sitting in a pile, right? They're all in a little baby pool splashing water on each other. Woohoo! Because they're all using lagging indicators. Nobody's right. The only ones that are right using that stuff are the smart ones that are like, hey, whoo, thank God this time I was right, right? I longed Bitcoin, it went up. I'm taking my profit right now. God, I wish I knew where the distribution levels were at. See, where to know where to take profit. It's all about probabilities and math. Once we figured that out, we were just like, this is a game changer. And that's when we started sharing all this with the public. That's why a lot of people, they get turned off by this because immediately they'll go looking. They'll back test us. They'll be like, oh, let's see what these guys are talking about. And they don't find anything, right? You can go Google ZZ score and Google Entropy and all this stuff. But are you going to find anybody literally out here teaching this stuff? No. If you do, let us know. We always say that. We'd love to find people that are teaching this way of trading, volatility, entropy, probabilities, statistics. Because we want to meet up with them, right? Do a little collab, try to bring the communities together, whatever, because it's tough out there. We are up against a behemoth. The echo chamber and the cult that is traditional TA, oh my gosh, it's hard to break into. But at the same time, we've all been there. We're not holding it against anybody. We're literally giving you an opportunity to look at this stuff, maybe watch some streams and be like, maybe there is a better way. And then before long, you're like, not maybe, yes, there was a better way. And it's all math-based. It's all probabilities. Just makes sense. Everything's math, right? I wish I would have known this. What? How old am I now? Holy shit. 35 years ago when I was in high school or whatever. I wish I would have understood how important math was going to be in my life. Did great in geometry, right? But I barely got out of Algebra 1 and Algebra 2. Math was the furthest thing. I mean, I was golfing all that. I was just doing all kinds of other shit. I didn't care about math. I wish I really would have, because I would have definitely excelled at it. It would have bricked me up like it does today. But 35 years ago, I could care less about math. I think I got a D- in Algebra 2. I think I got a C in Algebra 1 and like a D- in Algebra 2. I think the teacher passed me just because couldn't stand me. Just wanted to move me along, which is all good. So now later in life, here I am, old boomer trying to figure the math out. It's all about probabilities.
Because at the end of the day, you get to wake up and be like, oh, okay, where's the daily mean at? You don't have to fucking figure out anything. You don't have to guess what the shit is. You go, okay, where's the daily mean? Are we pumping towards it and pumping away from it?
Yep.
What's the situation?
Exactly.
And pick a trade. Right? It's like, that's the magnet. Obviously, let's just say 10% of the time, it won't touch it.
Right.
Okay. And that's where the real skill comes in. More so is knowing that it's not going to touch the daily mean and just like break through the bottom of the range and go to the weekly or something like that.
Right.
That's in the general region. And you get to set that up. It's literally like daily mean here. If the weekly is above, if the weekly mean is above, then you know, okay, cool. If price action is below the daily mean, then it wants to go to the daily mean. If it holds above the daily mean, it will want to go to the weekly mean, right? And that's also the short. If you have a weekly mean below, and then a daily mean and your price action's above, there's two magnets below price action. So it naturally wants to mean revert down. It's it makes life so much easier. You don't have to draw horizontal lines and all of this stuff. And then when you do set up good models, and let's say like the PB cones, like the candles come in and they're whipped perfectly and they hit. And like, let's just say the standard deviation cone hits +3 standard deviation cone side of the cone gets hit 5 times, right? you couldn't draw a linear line that's going to get that correct because it's logarithmic. So you actually need a curving line if you were to do TA. So that's the first thing. Everyone's trying to measure logarithmic markets with linear tools. So you miss the whole skew when it comes to the skew or the drift or the random walk when it comes to using TA tools. So it's also a good study to see, like, if I was to draw a TA line from the three bottom parts of the dippy dips going up the hill, you'll see that you'd never get it right because the let's say the PB cone that is that trend line is gradually increasing by 0.1% as it gets its exponential. It's not linear. And that's what puts in the bull dips and ramps up the markets or negative or bear dips. Anyway, let me stop chatting shit. But yeah, you got to wake up in the morning, look for the yellow lines, and guess that's where it's going.
Oh, yeah.
Or it's going to go to it or away from it.
He's got a good point. You don't wake up just scrambled going, oh, Jesus, now I got to do this again. Because we all know traditional TA, we've all been there. With just the shit you got to go through to try to figure out what the hell's going on in the market. It's now you wake up and you're like, returns mean revert. Let's go. Where's the data set? Where's the mean? What's happening? So it does. It simplifies everything, even though this all looks confusing as hell.
And here's another thing. On every single fucking asset that TradingView has, you click and you play. You don't draw, you click and you play. Your math is right on every single asset, or the regions will be highly correct on every single asset.
Yep.
You're not drawing lines for 500 assets, coming back to it a week later, having to redraw lines. How much of your time is that take? You know?
Yeah, big time.
And now then we want to talk about mental, emotional trading and stuff like that. How emotional must it be trying to figure out which is the right line? Like, which is the right 2 points to put a trend line? Of course, you're going to get sucked into trading and holding on to trades because you believe your line is correct. And thus you believe your trade is correct.
Yep.
You know, there's two places of error. You should never believe. Your data should tell you when your belief system is wrong. And that's when you know you're wrong. Anyway.
Yep, it's all good. Like it. I'm going to give some probabilities here. So on the monthly, you can see what happened on the monthly. Look at February. Right, February, nice little doji. Did it center out right at the mean, right at the Laplace mean? Yeah, it did, man. Opened up, literally went to the downside 68.3, pushed up to the top side 68.3, then mean reverted right at the close. Bam, right? So most people see that as indecision, right? That's where, and then people will look at traditional TA. Okay, hey man, that last monthly candle, very indecisive. I see that and I'm like, what do I see there? I'm looking at what a good battle. Look, what a great battle. Bulls and the Bears, right? Solid. Nice little battle here. That's the only way I'm looking at it. I'm gonna use the VEPS to try to see what the move was going to be. Because what if those traditional TA indicators like, oh yeah, this is bullish as hell. I'm going to jump in here. Dude, they're wrecked immediately. Why? Because as soon as the month opened up, went down, tested first standard deviation on the monthly. Pulled right back up to the mean. You know how many people cried right there? You know how many people got wrecked right there, thinking if it was going to continue to the top side first, they got blown out of their positions. Either they got a stop loss in the system or they're using way too much leverage and they got liquidated. And then it literally almost ran to the 1SD to the top side. This is a monthly wrecker. This monthly candle just blew up bulls and bears. All right, 100%. 100%. Because then what do? The same people. They're like, okay, well, I just got knocked out of my position. Oh, this is super bearish. Where should I short? Right here. Not knowing where the probabilities are at. And it got wrecked again. Because it bounces off the 1SD all the way to the top side to the 1SD. But anyway, we'll throw these probabilities out. So here was the 68.3 Laplace on the monthly, top side 25.879. We don't need to go through that. Let's see where the data set is now. So you got the first standard deviation, normal distribution at 29,000, let's just say 900, tick under 30K. You got the second standard deviation to the top side, 37.4. Third standard deviation, 46.8. Now to the downside, first standard deviation, 19, right? About 19K. Second standard deviation, 15,250. Third standard deviation, 12,2 area. Laplace distribution, the 95.4 Laplace to the top side, 37.2. And so for everybody just learning about the distributions, you've got two different distributions here. You got Laplace distribution and normal distribution. Everybody's going to know the normal distribution. It's the bell curve of normal distribution. At some point in your school career, you have seen this thing. You just had no idea you were going to be applying it to this at some point in your life. Did I think? No. Did I remember it? Yeah. Just foggy memory, right? A lot of shit happened in between for the last 35 years. But anyway, those are the probabilities for the monthly. And considering what has it done pretty much so far in a monthly, it's ranged inside the 68.3% first standard deviation range, not Laplace, right? The Laplace distribution range is going to be a lot tighter. Maybe somebody can post those two in the chart. There's actually a good graphic out there that shows them overlaid to show why the 68.3 Laplace and the first standard deviation that is a 68.3% probability are so different, right? The first standard deviation normal distribution is going to be a lot wider. But then when you get out here towards the fat tails, the second standard deviation that's 95.4% and the 95.4% Laplace distribution range are literally most of the time is going to be really close. You can see they are. Then you get into the fat tails. Here's the 3SD. Look at the 99.7 Laplace. And if you look at a graphic, you will see why. Way wider fat tails in a tighter 68.3 Laplace distribution range. It's literally like you're looking at the Eiffel Tower compared to like the Capitol Dome or something. Right? It's a huge difference. Look them up. All you got to do is Google it. It'll pop up images. Laplace distribution, normal distribution. Just look at the curves. You'll see what I'm talking about. So yeah, that's the monthly. And this looks, for this monthly candle to be hovering still up here and not pulling back inside to 68.3 Laplace, which is at 25. Now that would make more sense if we're going to get a pullback. So then what would I do? I'd go over onto those power means and I would be looking on the time frames. Okay, what time frame is the because like on most of those macro time frames, we're above the power mean band, right? We're above the wave trend, reverse wave trend. Usually you're going to check up on it. So I'm looking at the time frame. Where is it? Around 26. A lot of them were a lot lower, right? So that's actually good. But that means there is a 68.3% chance in the next, what's the date today? Yeah, in the next week that the data set pulls back inside like 26K, literally 25,880. We'll see if that plays out. Crazy. That was the monthly. Here's the weekly. And what's the weekly doing right now? Nice little doji. God, it just looks like the monthly. But what did it do? As soon as we opened up on this week, I almost went to the first standard deviation to the downside. All right, then popped up to the 68.3 Laplace. Boom. Then pulled back. Now we're creating this little doji on the weekly going into the weekend. You see here. Yeah, I mean, and since you're already inside that 68.3 Laplace, it's not like, hey, there's a 68.3 probability we get what's inside this range. We're there right now. That's why I wouldn't be a bit surprised to see this thing go sideways, right? Probabilities are dictating it. You get trapped in that zone, man. It just wants to hang out in there. It's the math. And you can just tell by the data set, right? BTC is strong right now, man. It really is. And it's all about buying and selling. People are buying. And if you look at the crypto market in general and the cap, money's coming in. Money has been coming into crypto. Yeah, good job. There it is. Yeah, that bottom one's perfect. That shows the Gaussian and the Laplace. And Gaussian distribution, that's normal distribution. So that's why you see a real tight 68.3 Laplace and a wider 68.3 first standard deviation. Then you can see the fat tails. Yeah, it's crazy. Love it. Love those graphics. But could this move, right? Could it still range inside this first standard deviation? Of course. And to the bottom side, we're talking 26K, to the top side 30,000, right? And that has been my target. If you look on, whoops, I was here. I should have pulled that back up on the monthly. That's what my target's been. If I turn on this RMLR or on the power mean, where are you at? Boom. That was the first target. All right. It's about 33.5. Right. And then if you turn on, I'm pretty sure it's the 30. Yep. There was my second target. Right. It's up there at 46.7 area. But now, obviously, with this monthly close, it's probably going to drop down. I would say probably under 44 for sure. The power mean probably going to rise. We're talking almost 34K. So that's what I'm looking for on the monthly, because the weekly mean reversion happened already. But this thing is trooping right now. Where's the 11? See? Boom. Even when we opened up this new month, it went down when it tested that first standard deviation. It popped right off the 11 RMLR too. Bam, bam, bam. And then you wonder why. Look at the RMLR right here. You wonder why we created this little doji? Well, look. Right? You open up, you dip down, you get below the RMLR, and it bounces off the 68.3 Laplace. And then look at the top side of the 68.3 Laplace. Where was it at? It ran right into the third standard deviation band. Oh, no, that's the first standard deviation band. Sorry. Wait a minute here. Which level, though? Yep, that's the 30. That is the 30. So it ran right into the bottom side of the 30 length RMLR first standard deviation band, pulled right back to the mean, right back to that 11 length. People wonder why we created a doji. There is a great example why. All right, what did these wicks hit? Well, let me show you. Show me on traditional TA. We'll discuss. But then you get the pullback right to it. Then the bounce. That's when I was like, man, this thing is strong right now. So this is probably going to run up here next month, probably. Yeah, I think this thing's cooked for this month. If anything, it's going to pull back, right? If anything, it's going to pull back. And we just saw where that monthly range is at. But as strong as BTC's acting right now, man, I don't know. That's a big drop. That tight monthly range. Where was that, baby? Come on. There, of course, everything's dragging slow. Good Lord, man. Was it down there? It's right here somewhere. There it is. Yeah, 23.3. So that's 2K below that level. See what happens. We will see what happens. But this is another reason why when you're using all this, I'm trading options. If I'm not trading options, I'm trading low time frame volatility, right? Because the volatility of Bitcoin on these macro time frames, man, it can get you jacked up. You got to have a workflow. You got to be able to analyze all these different time frames. All right. And that's what makes this so hard to do, because there's so many different like things that you're bringing together to use the VEPS to create an edge. That's why there's a lot of people out there, they talk edge. Everybody's talking edge. Oh, I got an edge. And they don't even know what an edge is. They think because they created some like moving average strategy, that's my edge. But they're getting wrecked. So what kind of edge is that? It's a cliff, man. It's the edge of a cliff. You're falling off. We don't want to create those kind of edges, right? An edge is going to bring everything together. Not only your indicators, right? How you trade them, right? Just are you limiting your losses? Are you taking your profits? Are you emotionally attached to your trades? That's why all this trading psychology BS that's out there, you talk about a worthless bag of crap that is distracting people, that people are making money off of. Anybody can go out and say, here, I'm going to teach you some trading psychology. First, you need to get a journal. How are you feeling when you woke up that morning and got your entry? I sit back and I'm like, are you shitting me right now? Are people literally listening to this joker? Because that is a bunch of emotionally unstable people. It's like, dude, if you're trading these markets and you're emotional, good luck. Yeah, right, bro? What are you doing? Trading psychology is BS. I'm going to write a trading psychology book, right? And it's going to be 500 pages. And on every page, it's going to be like the Bart Simpson fucking chalkboard, writing the same thing over and over and over again. Do not be emotionally attached to your trades. The end. Exclamation mark, exclamation mark. on 500 pages. Here, you read this. There's your trading psychology. I mean, yeah, right? It'd probably sell. That's the only thing people need to know about trading psychology. Are you kidding me? Journals talking about your feelings. What is this, a therapy session? Good Lord. But hey, let's all be real. Where are we in society today? It's a fucking freak show on wheels, man. So it doesn't surprise me at all that a lot, especially the younger generation. Yeah, exactly. That these people just they see anything about psychology, right, or anything, just like, oh, I need to dive deep into that because yeah, I'm a train wreck, and it's just crazy, man. It's just insane. That's the only trading psychology that you need. Stop buying these people's trading psychology books, their little teaching seminars, all this stuff, man. You talk about, that's how they're making money. You think these jokers trade? No, they're awful traders. The last one that was pushing this shit on a whole Discord, and even the Discord creator is helping him push it on all the people. His P&L was 30%, man. He was winning 3 out of 10 trades, teaching trading psychology. I mean, what? That's when I knew this was all a joke. I was like, man, these jokers, I got to get out of here. And people are listening. And this is the same guy that took my strat, added some bells and whistles to it, and started selling it. And the creator let him start to sell it, knowing that was mine. Right there, I was like, I am out of here. I'm not dealing with this people anymore. And that was right when the time I was flipping to volatility trading anyway. So I did not care. But it was, in my opinion, the best strat out there. Why? Because of the number system I was using, number one. The way I was using it. And I was using volatility bands, the best I had at the time. Right? Understanding that you talk about being built on bad math. The, whatever the hell, what are they called? The, Bollingers, which, hey, he's a nice guy and stuff, but oh, hello, time to update your shit, brother. Time to update your shit. It's all built on what is it, the 20 SMA or something?
Yep.
Yeah.
So it's volatility based off of lagging MA.
Yeah, riches. What? We're not doing that. Yeah.
And I about spit my coffee out with the psychology stuff. That was awesome.
It's so true.
I think the only psychology anyone needs to get right, and I wouldn't even call it psychology, I would call it learning trading, is take your profit. Quit thinking that you're going to buy something and it's going to, if you sell, you're going to miss out on the future moonage. That's how they get people, they want you to buy and hold.
Yeah.
And it's bullshit. You need to take your profit. That's how you win.
Yep.
100%, dude. 100%.
Yeah. They love retailers just sitting in them positions, man. They sure do.
Yeah, that's how they count on making liquidity for the exchanges, for sure.
Yep. Like that 4 hour move. And yes, I have not forgot about you, XMRs. I will go back and especially give the daily since we just opened not too long ago, although Bitcoin's been open. But yeah, like that 4 hour candle right there. Train wreck. People not taking their profits. You think the over leveraged look at the move, man, right? The recent one on the 4 hour when we were down there, when it dipped again below 20K. You think these people took profit? No, man. What are they doing? They're adding leverage. Adding leverage. You're wrecked. You're wrecked. This is where these exchange operators see it. There is just a pile of leverage and a pile of stop losses or liquidations down there around 26.5. Man, that thing dipped, but what'd it do? Dipped probably right to it and just wrecked everybody and then bounced right back up to the top. And that's when you start seeing all the tweets. Man, I was in all that profit and oh my God, manipulation. I swear to God, it's always the same. Instead, you're the goofball that maybe got a good entry at some point and all you did is just stack leverage on top of yourself. And you're like, oh, this exchange is great. They're just loaning me money to trade. They want me to be a millionaire. Think about that for a second. Do you really think this exchange is letting you use their funds to trade? You think they want you to win?
No, they're the house.
Exactly. You're up against
You
the
ever go
house.
to a casino and see all the cameras all over the place? That's the exchange looking at your stop losses
Yep.
and your liquidity and your leverage.
And there's the cream pie. Boom. And so people are seeing these moves. Oh, yeah. Oh, wait. Oh, yeah, it dumped out. But man, this is strong. This thing's going to the moon. This thing's going to the moon. I just saw YouTube Jimmy say in 6 weeks, Bitcoin's going to be over $1 million. Have you seen that shit?
Yeah, dude, that's such
I don't know
ridiculous
where
nonsense.
these people, it's all clickbait for sure. We're not going to.
But an analyst at a big firm said it, so it must have some credibility.
Right.
No, it doesn't.
Yeah.
A founder of a crypto said it. He must know what he's talking about.
Yeah.
Mean that at all. It's
Oh.
literally click, like Bilbo said, 100%.
Total clickbait. People fall for it. Like, what's happening here? Meanwhile, up here on the 4 hour, I mean, this freaking power mean band, if this data set doesn't get up or doesn't stay to the top side of the power mean band, this thing's going to flip, man. This thing's going to flip to the downside. We'll see. But then what are you going to do if we do dump out? Say we go down to 24.25. This is good right here because that's literally, let me see something here. That's a little closer. I mean, that's about 2K. No, that's actually about $1,200 above that monthly range. 24.5, yeah, about 1,000, something like that. That wouldn't shock me at all. But then what do? You're to the downside of the power mean band. This is why people get wrecked, man. That's why we love these power means, right? Because returns mean revert, period. You want to know where this band is. Or is it bullish? Is it bearish? What's happening here? Where's the wave trend and Fisher? Where are the log MAs? It all makes sense. And I love when all of them are just trapped up inside a tight power mean band. Most of the times, when you see this power mean band tighten up, say all 3 log MAs, reverse wave trend, and Fisher are up in here. Fisher, that's not going to happen very often. So let's exclude that. Just say all the log MAs and the reverse wave trend is inside the power mean band and it's getting tight like this. Guarantee you're probably going to see low volatility. Volatility will be expanding at some point. And so now it's your job. Is it positively or negatively correlated? And so, but you're on a 4 hour. So how are we going to get a good, because I'm not going to get an entry here. No way. Say it was all there and I'm looking on the 4 hour. I'm like, well, this looks bearish. Well, there's a hidden bear and this, that, and the other. Am I going to take an entry right there? No, because BTC can fly around $2,000-$3,000 the other way or something. You got to work down through. You got to find your good entry.
I mean, we've literally seen it fly around $2,000-$3,000 in the last week.
Yeah.
You know, very like bouncing down, bouncing up very nicely.
Yeah.
Like within an hour, you know. You gotta look at those lower time frames for sure.
Let me turn this back off.
Or wreck big time. I mean, it's a good monitoring time frame, but it's not a time frame.
So yeah, that first standard deviation range, it's about 4K. Actually, it's higher. It's about 5K. Bottom side first standard deviation on the weekly, 26. Top side, 30,914. Second standard deviation to top side, 33,656. Bottom side, 23,958. That's like a 10K range right there. That's why. Like, let me see here. It's on a weekly. Yeah, if I was on a daily projecting that out, yeah, it's crazy. That's why when we're getting in options positions, we like to project out into the future off a daily, right? We did this earlier in the stream. We can go back and watch if you want. But third standard deviation, we're talking 14K range, 14.5, 22,000 to the downside, 36,614 to the top side. Even expands it a little more to about 16K range if we're talking Laplace distribution. Because if you look at look at the graphics, you'll see why. 37.5 to the top side, 21.3. More importantly, the daily probabilities. And right now, what are we doing? Already nailed the 1 SD to the downside. I'll show you. BTC, there's the wick right there. Bam. There's the first standard deviation on the daily. Showing it on the chart. Wick right to it. There's the blue dot. So pretty much opened up, had a little bit of an up move, then boom, for 1 SD immediately. But now look, It's already pulled back up inside the 68.3 Laplace distribution range on the daily. And you'll see it. Go over here. There it is. Here's the 68.3 Laplace, the white cross lines. You're centered right here, but look, it just keeps getting rejecting off the top side of the daily volatility range. Right there. All right, it's like stuck in here right now. Already did a 1SD move. So what'll happen here? In my opinion, I mean, if I went down through the time frames, I would probably say, this is definitely hidden bull right here. Guarantee it. I'm sure you had a lower low on the oscillator. Let's even look. We got 15 minute on BTC. Yeah, no div. Shocking. Thought there would be, but there's not. Fishers are strong though. Yeah, this is just clean, man, on this 15 minute. And if I ever say clean chart, I'm talking about price action and returns. Is there any imbalance in buy and sell pressure? No, not on the 15. Not on the 15 minute. I'm going to find this. No, not there. God, not even there. Clean chart again, man. It's setting up. It wasn't on the 15. On the 9 minute though, setting up a little bear div, right? Look at the returns oscillator though. Trying to turn up on the zero mean. It's negatively correlated though. Negatively correlated. Fishers looks like 2 are up, 2 are down. I'm like, damn it, where's the hidden bull that sent this rocket ship? God, it wasn't even on the 3 or on the 6. But there was the hidden bear. Pulled back that move. But yeah, right here. No, man. No. Just setting up more hidden bear up here. Or more bear, my bad. More bear div. But listen, the honey badger don't give a shit. But look where you're at. Populated on the 6 minute, finally, UPM. You've just been rejecting off the Fisher. I don't care what time frame. You go down on the 1 minute. That's why when you hear people talking in the chat, you hear a lot of people talking about these levels. Right? A lot of people talking about these levels, especially like wave trend. I mean, we have one guy who's using several different like lengths of wave trends, and it works good for him. There's so many different ways to set this stuff up. It's crazy. I mean, this thing's got me irked now. Not even on the 3 minute. Let me see. Was it right here? No. What in the hell was that?
Oh, hey, P-Funk.
I got monkeys on the roof. Warlord's got monkeys on his roof. I got squirrels or something. I don't know what the hell's going on. Let's see. Yeah, crazy, man. This thing's just fucking clean. And what's that tell me? When I see all these clean charts popping up and down through these time frames, the bulls have the bears' attention. They're not laying down. They're like, okay, but you can see who's been winning, right? You got an even battle, but the bulls are just hammering them. But there is resistance from the other side. And this is just, you're definitely not going to find this in any books. This is just like, because how many people are talking about the divergence between price action and returns? Zero, except us. I've never heard anybody talk about it at all. Well, most people think div is BS to begin with. And when you're talking about traditional TA, you hit the nail on the head. Right? You hit the nail on the head. It is worthless. You're trying to use a lagging indicator, the RSI or the Stokes or whatever, to determine if there's an imbalance in buy and sell pressure. How the hell are you going to do that? Do we think price action's following the Stoke? Following the relative strength index? No, it's following the returns. So why in God's name would people be using RSI and Stoke for divergence when that's not what price action's following? Price action's following the returns. And you're not going to hear a lot of people talk about it. This is what it's just very important to understand that, because this is where you're going to see the imbalance 100%. You go down on the 1 minute and the divergence is everywhere. All the little trend changes, all the little continuation divs, you can see it. And if you drop down into like a 10-second time frame or something, if you have the premium account on TradingView and just watch how it all works, it'll blow your mind. You will see a symphony in motion, right? Because you get to see everything just moving and jiving and working together. Powerful. Powerful. But you got to be able to see the whole chart. You can't start focusing on just like one indicator, right? You got to see the whole forest. not just staring at the first tree. You got to be able to see everything and just see how it's all moving and ebb and flowing. And it's all going to start with the volatility. And you're looking for outliers. You're looking for outliers because there is a bunch all day long. This is the 3 minute. You can see all the flashes and volatility. They're all over the place. You drop to a 1 minute and look at the volatility. And like Yasha always, like if I ever come out and be like, oh, not much going on today, like I'm looking like on a 15 or, 33-minute chart. And Yasha's like, hey, drop to the 1 minute. It's like, oh, yeah, I forgot about the 1 minute.
There's always hills and valleys on the 1 minute for sure.
Yeah. Volatility expands and contracts and expands and contracts, expands, contracts, expands, contracts, nonstop all day long, throwing out all these signals, all these outliers, all these occurrences, man, all these occurrences.
Yep. And the same with the entropy too, which is beautiful. You can use either of them. You can use both of them together. I like to use both of them together. They're just, it's amazing. Entropy. And very often you'll see one lead in front of the other, or the other lead usually very close, and you get very nice clues if you use them. Very nice.
Yes, 100%. What? I've been talking too much, not paying attention to market. Let me see something here. Yeah, this dollar just going sideways here, right? It got back up into its monthly range. I'm telling you right now, the dollar bears, they are battling right here, man. They want to keep this data set below the bottom of this monthly range. That's why you see it. No. I mean, they are going to fight tooth and nail to keep this thing down here. Guarantee it. Guarantee it. They're going to expend a lot of juice. And that's why if it's too much, if there's an imbalance there, it's just going to create a hidden bull or a bull div, right? And then them dollar bulls are just going to kick them right in the balls. So we'll see what happens. But I guarantee you the battle is on right here, man. Especially going into the end of the month. They want it closing down here. And so you also want to look for is what you really want to start doing is looking at a data set. When you're getting close to a monthly close, I'll usually start looking about 3 days ahead of time. I'm going to try to diagnose where it opens up. Like you'll see the bulls try to push that data set up above where the new monthly range is going to populate. So then they can get a pullback and a bounce off that monthly range. The bears are going to try to push the data set below where the new monthly range is going to populate. So we can have a little pump up, test the monthly, and dump from there. And you can see it on a daily, a weekly, and a monthly, how that every day. And we can go back in time just on this chart and show how by the end, look right here, yesterday, look at lift, the end of the day, pumps up at the end of the day. Where to? Right? Where the new daily volatility range is going to be. Right? Happens all the freaking time. Let's see if it did it on the minis. And look how tight the minis are. Look at the dump, right? The bulls are like, oh, hell no. We're going to, by the end of the day, we're going to send this up above where the new daily is. Did that help? It went down and tested it, but it went to the downside of the 68.3. Now it's at the bottom side of the 68.3. The bears are pushing hard, man. Bears are pushing hard. That's what I see when I look at that. But you'll notice that. So, like you're going into the end of the day. Like I used to tell people, like when I was definitely actively trading future delta, right, on low time frames, I would never, especially like on crypto, I would be out of my trades by the last 4-hour candle. I was in no active trades of the last 4-hour candle because that last 4-hour candle, I would be diagnosing where the next day's daily range is going to be. And then by doing that, right at that open, it's easy trades when you see where the data set is and when you know where that range is going to be. Are we above, are we below? Because you know that range is going to get checked up. And that's what I look for every day. If I'm trading intraday, if I'm trading 0 DTE options, that's exactly what I'm looking for. Exactly what I'm looking for. So down here, the top of the weekly, this would have probably been a good area. So you get down here to like when it was at 389.5, I was running my trap, or I probably would have done it. I would have probably been looking at the top side of the 68.3 up here at the 394s. And oh my God, I got shafted. I did take a peek. Those 394s, when it was down there, I'm pretty sure if I remember correctly, they were about 40 cents. They're at 95 right now. Right? They're at 95 just from this pull up right here from the top of the weekly. I would have probably already taken profit. Probably, I mean, it's a double, right? Was it 45? Yeah, 94. About, yeah, a little over. Good shit. And that's when people that don't have this intel to look at, man, oh man, oh man, crazy. You got to have it. 21's up here and the 200's down here. That's a great range. No, it's not. It's a horrible range. Yes. Let me see. What are we doing here? Market trades. Oh, nice. What'd you do? 50? What'd you do? Short it right there? I'm trying to see. I need a monocle. I had somebody put my glasses on the other day and they were like, whoa, something's wrong. So they wanted to see what my prescription was. I was like, well, what do you think's wrong? They're like, I don't know. I can't see out of the left side one. I'm like, yeah, there's no prescription in the left side one. Like, what the hell? Why do you only have prescription in one lens? I'm like, tick, 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 tick. Because that eye doesn't work, my friend. That's why. You should see the alligator. I got a pair of boots in the closet. He didn't fare very well. I lost an eye over it, though. Let that spread. Man, there's this guy that got in a fight with an alligator, lost an eye. Now he's teaching the VEPS. I'm kidding. It wasn't an alligator. It was a spider. If everybody knows the story, it literally was a spider that it's not like he attacked my eyeball or anything. I was just helping somebody out. Lost an eye over it. I was literally in a dark attic with a headlamp on, cutting a vent hole, putting in this guy's HVAC unit, or helping. So I'm cutting a vent hole. So I go to lift up a piece of insulation. There's a wolf spider about that big. And if anybody knows wolf spiders, they jump, man. They are jumpers. They'll jump 10 feet. This thing immediately, and it's like a horror movie because I had tunnel vision because of the headlamp, right? Everything's pitch dark. I pull it up. There's this massive spider and it jumps right towards me. So I just leap up and nailed the back of my head on a joist, and my retina in my left eye fully detached. And if I wouldn't have hit that joist, there was like 2-inch nails coming through the top of the roof. I'd probably still be up in the attic, just hanging there from a nail, just my skull. That was a bad day. A bad day indeed. But that's the spider eye story. And it is true. Scared the shit out of me. Okay, back to the charts. That's right. Now for trading, get it all. Oh, shit. Hold on here. 1040, huh?
Damn, Forrest, that was brutal. But yeah, probably still be trading.
Right?
Yeah.
All right. Getting wild text today. So yeah, when I said, would I have already taken profit? Yeah, I would have. I would have for sure. I mean, look, it's already pulling back. So yes, these are the things. And yeah, look, it's already back down too. Now it's at 70 cents, right? It was just at 95. That's why. I don't care if you're trading options, futures, whatever. You got to take your profits, man. Got to take them. You can't be greedy. You can get back in the trade. You can get back in the trade. I've even double or triple dipped, right? Which you got to be careful with. Got to be careful. Like Lyft right now, right? I'm in a trade in the March expiration. Oh, no. April. Oh, what am I in? Hold on. Jeez, I don't even know. You know, it's a good life. Yeah, April. I'm in the April. So I got, 28 days left? 28 days till the April expiration. So I got about a week, right? Because I'm definitely doing something. Definitely going to do something there. I'm either going to roll it or take the profit. But right now, I'm probably going to take the profit. Probably going to take the profit. Indeed. But that's a triple dip since the beginning of the year, right? I mean, we're talking, I'm in an April expiration. I think I got in the February and the March on Lyft. Both to the top side. Got profit on both of them. So right about then when I was getting ready to enter it again, I was like, triple dipping, huh? Should I go for it? It's like, hell, why not? Let's do it. Let's do it. Because you can just do, right? Vertical. You can just do some verticals, some defined risk trades. Defined risk trades. So if I was bullish and I wanted to do a defined risk trade to the top side, what would I do? Right? Especially if I'm a net seller. If I'm a net seller, a premium, what am I going to do if I'm bullish? What kind of vertical am I going to put in? What am I going to sell? I'm going to sell puts. I'm going to do a put vertical spread, a bullish one. All right. Instead of buying premium, premium decays. That's why anybody that trades options most of the time, but this is where you have to have a big account. You got to have a big account. That's where, but at the same time, that's where the defined risk trades. Because say I was just going to do a regular, if I was going to buy premium and just do a call vertical, you can. The problem is the premium's going to decay, right? So you're buying a call and you're selling one up at maybe at the top side of the expected move. But if you hold that all the way to expiration, you're going to lose it. That premium is going to decay big time unless you're all the way up at that strike. That's why if I get in 50% profit, if I bought premium, I'm taking it immediately. I don't care what's happening. I don't care if volatility is expanding because the correlation could break any time. Yeah, crazy, crazy story, brother. Indeed. Indeed. That pretty much ended I lived in Tahoe for fucking almost 30 years, skiing 5 days a week in the winter, just having a ball. I got back up on the mountain. This happened in July of 17. I think it was the winter of 2018 when I got back up on the mountain. I had like 3 accidents in the first week. Man, it's a whole different story. And I only have 1 speed, fucking mega. So I'm just running over tourists. Just cream pieing people. And of course, they don't have fucking helmets on. I really hurt a dude pretty bad one day. It's his fault, obviously. Little did they know I was missing an eye. But anyway, that's another story for another time. Guy was pretty pissed. It's like, why don't you have a helmet on, man? It's dangerous up here. People die every day. So people don't understand these resorts. You think they let that news story spread? All these people dying on the mountain every year? No, it kills tourism, man. Kills tourism. When you're a local, though, it's in the local paper every day. Some dumbass, it shouldn't be somewhere on the mountain where he's thinking, oh, this is easy. Okay, good luck. Pretty nuts. And in bad conditions. Then you get the tourists that come into town, they want to do some backcountry and they have no idea what's going on. Horrible, man. You'll get you'll especially in Tahoe, because it gets warm during the day. So we won't have snow for maybe a few weeks or something. Maybe even a little rain at some point. But anyway, you just get this crusty, hard, icy shell, and then you'll have a dump. Right on Upper Mountain, you'll get 3 or 4 feet, and these dumbasses are up there, and they're gonna go ski that shit. That avalanche central, avalanches everywhere, people dying every day. It's dangerous as hell, man. The stream went right into risk management on the mountain, I guess.
There's divergence, and then there's divergence.
Yes, there's divergence, and there's divergence. Funny. Okay, it is what it is. This market's going to close for the day here. I'm working up on what? God, it's already 11. Yeah, about 5 hours. 5 hours till market close, huh? And the dollar is going sideways, just hanging on for dear life to the bottom of this monthly range. And that's this red cross line you're seeing right there. That is the bottom of the monthly. There's the center of the monthly for the dollar. So right now, if I were to populate this, so if I'm going to try to find out where the new monthly range is going to be, I'm going to use a daily. Here, we'll give a little course here how to do this. So I'm going to throw a vertical, number 1, March 1st. Bam. Then I'm going to throw a vertical up to the end of the month. Bam. So we got about a week left, right? Yep, got about a week left. So obviously, we could have some massive moves in between here. That's why I won't start the diagnosis till about 3-4 days out. Then you'll get a better idea. But like right now, so I'm going to take volatility into account. What was the volatility doing here? What was the data set doing? Mostly pushing to the top side, right? So that is going to bring that monthly level up higher. If this were to close tomorrow, I would say the top of the monthly range, probably about 27. Maybe even a little higher. You might even be into these candles a little bit. 27.5. And then you're probably going to get the downside, maybe about 25.5, then centered up somewhere around 26.5. That's what I would look for probably if it were to close today. But we got a week left. I mean, this thing you could have this data set boing, 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 and the volatility is going to change that. Because if the volatility is all to the top side, which majority it was, we had this little spill out. But if you were just to look at this, what would you say was more dominant? Yeah, it was the volatility of the top side. There's no doubt about it. Yeah, it's a massive. And why do I say that? Well, look at these moves, right? Look at the moves to the downside for the distribution levels. Now look over here, right? You're closing above 2 SD levels, right? All three of these daily candles. Now these two closed above the 2 SD. This one pulled back into the 68.3 Laplace. Probabilities dictated that, right? But then you got another one here, almost a third standard deviation move. So the volatility predominantly was to the top side, if I'm looking at that. That's why it's going to pull that new range up. If this was all to the downside, it's going to pull it all down. All right. Say we boing. What if we bounce down? Boom. You're going to start to center, right? If you get an even amount of volatility at the top and to the bottom, you got to look more to, and is what I like to look for when you do get those, when you get those moves. Say it moved down right now, and say right now you got a move down to like 25 or something, and you send a wick down, and it pulls right back up, and then another candle, maybe another wick down to that area. And then I'm looking over here. Okay, where did those wicks go? Now I'm going to go over here and be like, now where are some of the wicks to the top side? Where's the void? Right. And so then I'm going to be looking in there, because when you see wicks hitting an area, going to the top side and pulling back, or going to the downside and pulling back up, there's where the volatility is. That you think of it as the mean. I don't want to use that word, but I'm gonna think about that. That's where the gauge where it's going to be too, for sure. But yeah, this is a lot on everybody's plate, but it's crucial to figuring out how to trade the VEPS, because you're going to want to know where these daily ranges, monthly ranges, weekly ranges are going to populate when it gets towards the end of that time. It helps a lot, because wherever the data set's at, if you're below, you're probably going to go up and test that range. And so people are like, well, how do you know if it's going to get through that range? Well, it's really simple. If volatility is contracting and you're going up to test one of those ranges, chances are you're going to reject there. You need volatility expansion to get through these ranges, usually, a high probability of the times. Right? Even like volatility, if you're moving down through those ranges, you're going to need negatively correlated volatility expansion. Going up through them, you're going to need positively correlated volatility expansion, not implied volatility, not historical volatility, percentile, volatility percentile. And then then how do you know when to take profit? That's where the historical volatility and the implied volatility come in, because when they all peak out together, especially at 100 percentile, time to take that profit, or you're getting ready to lose it. And you can see it time after time after time after time again. You got to know when to take your profits. It's not just, I think it's a good time. No, you need to have something that you're looking at that's giving you a good idea when it comes to the probabilities. Is this a good idea? Yeah, it is. We just hit a 95.4% level. All right. So chances are we're either going sideways here, even if it's a daily time frame, or we're going to pull back hard. All right, one or the other. If you're up at the 95.4 Laplace, you can hang out right there. There's only a 4.6% probability you're going to close above that area. So that's why, number one, you are taking all your profit. Like I see sometimes people are like, well, I got 4 lots. I'm going to take profit on 2 of them. Why not take it all? Why not take it all? Take all the profit. Don't even give a dime back to these people, man, because they're going to try to take it all. And another thing, these exchange operators will notice at some point, hey, we got a player here. We don't know who this is, but this guy knows what he's doing. Dude, when you start winning a lot of trades, if you become very profitable, I don't care where you're trading, you will become a target. You will become a target, especially if you start throwing on some leverage or something. It's like raising up a red flag. I'm here. Here I am, right here. Yeah, the guy that's been just crushing the markets. Here I am. They're going to be watching you. And people are like, are you serious, man? There's all these people trading. You think they're really? Yeah. Yeah, they got algos doing this. They got algos looking where everybody's stop losses are, right? Where's everybody's take? Are you putting a take profit in the system before it's getting there? The only time I ever put a take profit in the system is when I know that they're not going to be able to flip it around. The volatility is expanding. It's hauling ass to my take profit. Then I feel safe putting it in there. But you start putting these into the to the exchange system. They know where your stop loss is. They know where your take profit is. They know where your liquidation point is because you're using leverage. If you're just trading, if you're not trading any leverage, you're not putting any stop losses in, but you are a ghost. You're a ghost to them, right? They don't know you. You will, though. Over a period of time, if you continue to win, you will get on their radar. To do it faster is using leverage, throwing stop losses, or take profits in the system. This is just what I've found over years of trading. This is why you hear everybody, I just got stopped out and then the price action went right back to where it was. What the hell's going on? Manipulation. Yeah, you're allowing it. You're literally like the vampire's knocking on your door. You're opening and going, come on in. Here's my stop loss. Pretty much. Got to be careful. I'm not saying don't use them, but have it in your head, man. You don't need to put it in the system because real traders are monitoring their positions. Real traders are trading intraday. Let's not lie. You don't swing trade volatility. These are the people that are really getting wrecked. If you're just swing trading volatility on a 4-hour or a daily or something, man, it's no good. It's no good. Not saying you can't win a trade here or there, but you're going to end up on the downside of that. You're going to end up on the downside. All right. Is there anything else we should chat about? Probably not. We went over everything from spiders to skiing to our RMLRs, volatility. We got it all covered today, I think. And it's almost 11.
Quarterly end of the quarter's coming up, so projections are looking fine, man. The
you know what?
Good.
Keep me all excited. I forgot about that. Let's look at the quarterly on Bitcoin. That's not a bad looking quarterly candle there, ladies and gentlemen.
Yeah.
Hello. Looks pretty good. Literally, first standard deviation on the quarterlies at 31. You know what? I never looked at that. Powerful, man. Powerful. So yeah, we're coming up to the end of the month and the end of the quarter. Almost hit a 1 SD on both. That is a powerful move. Problem is, there's not enough history to look at a quarterly on Bitcoin if we want to use the charts just to see what's happening.
It's right in the last projection we made, though. Very nice.
Like there's the quarterly. Look at my indicators. No good. You know, what kind of info is this giving out? I can see a little bit of volatility. I think you
look at the monthly, though. We look at the monthly, right, for the projections we made in December?
Oh, yeah. And here, I was talking about the whole time. Look, it's still building. Look at this beast. Look at Bitcoin. Look at the correlations, positive. I was telling people all the way from the all-time highs, all these lower lows, look at the returns oscillator. Shall we? Sure we should. Fuck it. Let's pull up our favorite little indicator we like to talk about. Let's see here. Oh, and of course, I didn't even have to really look. Look at the returns oscillator. Look at the RSI. Right? Look at the RSI. All lower lows, man. Just like price action. Although returns oscillator, and we're over here beating the drum going, guys, there's a shitload of bull div building on the monthly. When that thing goes positively correlated, this thing's going to pump. Right when it did, bam, where'd it go to? Look, outside the, well, not, it wasn't, God, this is just data error because there's not enough history. But outside the power mean band, what did it do? Immediately right to the wave trend. All right. Then we had that little pullback. Then wham. Now it's above the 9 and the 33 length RMLR. You got the top side of the power mean band at 46. Beautiful. Beautiful. All the fissures are up. All the fissures are up too. Meanwhile, on the RSI, oh, hey, man, it's crossing the MA. It's time to get in the trade. You missed the big move. It's okay. Just another example. The RSI not a good indicator. Not a good indicator, especially to use for divergence. Indeed. All right, let's wrap this thing up. Let's wrap this thing up.
Yeah, man. A good one.
Yeah, right? Good stream. Indeed. So we'll get back at this next week, Monday morning, 9 a.m. Eastern Standard Time. If anything crazy happens in crypto, though, we will do a weekend stream. Yep.
Okay, so I had a quick question just in regards to you stated selling calls. And so you're looking for deterioration on that premium? Did I get that right?
Well, no, like if you're selling calls, it means that you're bearish on the market, but you don't want to buy premium. You want to sell it. So it's
looking for deterioration on that price.
Well, no, when you're selling, here's the thing. When you're
selling a call.
Yeah, when you're selling a call, you're bearish on the market.
Yeah.
And is what you're looking for. You are looking for like that this is the whole problem. If we're naked selling options, very dangerous, right? I mean, even people that are just starting knows that if you're selling naked options, your loss is going to be infinite. So if it turns, that's why it's like a lot of people don't just start out in a strangle, or they don't start out in a butterfly. You know, if you have a massive account, it behooves you, hey man, if you see something happening, you want to sell premium, you're just going to sell a naked put or a naked call. But if that thing turns against you, that's when you start adding legs, right? You can immediately turn that into a defined risk trade, or you can throw a strangle on now. There's a lot of different things you can do. But when you're selling, it's a credit.
Basic statement around selling a call versus, buying a put.
Yeah. I mean, because the whole difference is when you're buying premium, the premium is going to decay. That's why if you are buying premium, that's even more. As soon as you get into any amount of profit, I'm taking it, because if you, it behooves you to take your profit when you're buying premium, because it's just going to decay. That's why. That's the whole thing where it even comes into play on the entering 45 days out, exiting 21 days out. It works both ways. It's good because once you get inside that 21 days, that premium is going to start to decay big time. And it's just eating away at your profit. Unless you're having a hammer move. If the thing's moving hard, that's what you want. If you get into position, you're buying premium, you're buying premium because volatility is low. And you're counting on that vol expansion to move the data set quickly up to an area where you can take some profit before it really starts decaying hard. Where the other way, you're counting on the decay, right? You're working with it.
That's what I was getting at. That was kind of my point. So you're kind of keep counting on the decay of the price.
Exactly. Yep. And that's why usually it's going to end up, if I sell a call because I'm bearish. Well, what if it goes the other way? Well, now, hey, maybe I'm going to turn it into a strangle, right? I'm going to do something, because you don't want to just sit there, because you could start losing a massive amount of money. That's what happens, because people forget. That's why defined risk trades are so powerful. You go into the trade, you know what your risk is already. You already know what the risk is. When you're just selling naked, you have no idea. You have no idea what the risk could be, and it could be massive. That's why you just it's tricky, tricky.
Mine was just more of a basic question on the buy versus sell on either call or a put.
Right.
That makes sense. So you're just betting on the deterioration versus.
Yep. For sure.
The premium going up.
100%.
Okay. One other question. Yesterday I was looking at. I have my screen set up, and it's kind of convoluted right now, and I was trying to refine it so I could kind of parallel what you're showing when you're going through your analysis. And so I was wondering if I could get or as a way to get information so that I could set my screen up so that on TradingView, so that I can kind of follow along, because mine's a little bit, what I would say is convoluted.
Mm-hmm.
If I get down to any low time frames, I can't I can't delineate anything. And then
yeah, definitely is what you need to do is like screenshot your chart, what you're looking at, throw it in the Discord, you know, and then put in there what you're looking for, what you want to do, how you want to set it up. Do you want to set up exactly like we've got them set up, things like that? Because
I'd like to just set it up like yours, because that's the one I'm kind of following along.
right. What
See what I mean?
what level of trading view did you get? Just regular? Just intro level?
Yeah, the first tier. I could upgrade at any time, but I did the first tier.
Yeah, that's the thing, because to be able to populate something like this, you're gonna need a higher level, because it only lets you, I think on the lowest level, what's it let you populate? Five indicators or something?
Yeah.
Although, you know what? That's not so true, because you can use a split
if I just
chart.
had the one screen, if I could focus on that one screen in your upper left
Right.
now, that upper left screen,
Yep.
and populate that and be able to follow along. I mean, there's one other indicator. I'd have to look real quick. Hold on.
Well, here's what I can do.
Well, you can always split charts, and then definitely post screenshots of, like share your screenshots or whatever.
I'm going to share this with them.
Trading view into the general chat, and we can always help you.
Because right now I have an ATVRE, an MTF Laplace, and then I have a direction predictor that's separate. But those two, the ATVRE and the MTF Laplace, on your screenshots that you sent me, I set it up for that. But it is a little bit convoluted. I am following it. I mean, it does make sense.
Here, click on that link.
It just doesn't look the same as, say, that upper left-hand screen you have there, the way you have that one set up.
Yeah, I just put a link. I just put a link in Alpha Voice. If you just click on that link, that'll allow me to drain your bank accounts. No, I'm just kidding, man.
Yeah, right on.
So if you click that link, that is literally going to populate this in your TradingView account. So that's me sharing this. So is what you do when you first populate it, it's going to say copy up here, right? It's going to say copy. You want to save that. You want to save that chart, and this is where it'll be. Let me see here. Wait a minute. Is it in here? Favorites? No, that's not where the charts are. Where
the Discord voice?
Yeah, in the Alpha Voice.
Yeah. In the chat.
Okay.
And then you can go over here. Once you save that copied chart, then you go up here, you click on here, and load layout. And if you click on that load layout, look, it'll pop up all these different setups. This is all just different chart setups, right? And it'll populate it in there. So anytime you just go in, boom, you click on it, it'll populate that whole chart. Populate that whole chart.
All right.
Yep, and that should
work on that.
Yeah, just work on that. And then any questions in the Discord, just ask in the Discord screenshot, which is easy as all you got to do is go up here.
In the general chat?
Yeah, just in the general chat.
Yeah.
And another thing it helps.
I was going to recommend one thing quick, just to look into. I mean, I know when you first start TradingView, there's tons of stuff, so it takes some time to kind of get used to it. But I would learn how to save templates. So that way you have saved it's like basically a favorite of a chart. And if you within the template section, you can star them and make them favorites, which it'll make them basically accessible right on your chart. You can click them at any time and easily switch through different charts.
Under that drop down.
I can take a look later if you have questions. I'm driving right now, if you can't hear the road noise, but I can take a look in general and try to help you later. But I think that's a good way to not overdo it at first, and you can save a few on specific templates and then kind of just cycle through that way too. But
the way I have it set up right now, it's okay. But I'm with me following along.
You know how to share screenshot where you click on the right, all the way to the right on the top nav bar, and then you select that button, the little camera icon. You click that. Yeah, you know how to do that, right? And then you see what you're looking at, and we'll be able to recommend ways for you to tweak that, you know, for whatever you're trying to do.
So I have to save that chart image
Whoops.
first.
I don't know why I just did that.
Yeah, just copy it. You can just copy. If you pick the middle link of that menu will just give you, it'll just copy that link to your copy board or whatever, and you can just paste it. Just Control V into the general chat or in here during live streams.
All right. Yeah, I can do that later. That sounds good.
Whoops.
Yeah, man, happy to help.
I'll be working on this, so I'm just throwing my questions out there as I go, so I can follow along.
We'll stop with the questions, man. We know this is counterintuitive a lot, so by all means, ask all the questions you want, man. That's what we're here for.
Yes, we like them.
Making a lot of sense though, so
Good.
And I'm obviously tying it together with my other, trying to get away from that other stuff, but you know, it's a hard magnet.
Definitely, yeah, no, definitely get away from, like, when you're looking at the VEPS stuff, I highly recommend you don't look at that other stuff unless you want to just like leave one on there just to see how wrong that other stuff is, because it's mind-blowingly wrong.
I just have it on my trading account where I actually have my funds.
Oh yeah. Okay, so it's not taking up your trading view space. That's good.
No, I have a total different platform that I trade on, so.
Think about it. Think about it like you've been dating a stripper for a few years, where you can go there and they got $2 steaks and stuff, and then you went to church on Sunday and you met a really nice, wholesome girl. Want to take her home to mama? You got to dump the stripper.
Pretty much, man. Pretty much.
It's hard though, right? Because the stripper knows how to tweak your buttons. Sorry, time to fly. We have a female in the chat. But yeah, she's probably laughing too.
Yeah, awesome. So yeah, definitely, like, when you're looking at VEPS, look at VEPS. Try not to look at the other stuff, because that other stuff is, I call it voodoo TA, man, because that's what it is, dude. Like, you're better off throwing darts at a board with your eyes closed. VEPS will actually show you what's going on, as you can see. So just learn this stuff.
I've been following along. No, I've been following along a lot. Looked at a couple indicators, and actually, it makes a lot of sense just watching what I have now.
Yeah.
So I just want to get a little more. Just want to be able to follow along on these streams, so I can.
Well,
tie
you
it
got
all
that
together.
chart from Bilbo. You got that chart from Bilbo, and if you set up a projection chart also, like with the projected losses and the LRs and like some Laplace distribution or normal distribution, man, you should be really good to go, man. Like, to learn this stuff, it's powerful stuff, dude. And ask questions, man. Ask. We were always happy, man. Answer questions, like, really, like we look forward.
I've been waiting till the end of the stream.
Yeah,
so
you are welcome to ask in the middle of the stream. I noticed that. You don't have to wait till the end. You can ask in the middle. It's cool, man. Like, we look forward to questions. Trust me. It's like, we're not like other graded Discords. We want people to actually learn, man. Like, that's, we've said it a million times. We're gonna keep saying it. So I enjoy the fact that you're here learning a lot, and I'd love to answer more questions. Ask all you want. See you in the general chat and all that stuff.
All right. Sounds good. Thanks.
You bet, man.
Yeah, we're Zane.
So yeah, we should wrap this up, huh? It's been a couple hours.
Yeah, we're gonna wrap it up. Like I said, we'll be back 9 a.m. Eastern Standard Time Monday morning. If crypto makes a move this weekend, whether it's a dump or a pump, whatever. Although I see a little sideways action coming. We'll see what happens. We'll definitely do a stream. Other than that, watch out for the spiders. They're dangerous little boogers. You don't want to lose an eye like old Scotty. But yeah, wherever you live out on this big, beautiful blue marble, have a wonderful rest of your morning, afternoon, or evening. We will see you guys later. Alpha Trading out.